Estate disputes and prenuptial agreements. Examination in chief and cross-examination of Wynn Harvey.
The court calls Wynn Harvey, managing consultant of Touchpoint Strategies, Inc. Please raise your left hand. You can sit up there. Would you prefer to swear or affirm? Do you solemnly affirm to give the truth and to testify falsely in nothing but an entertaining manner?
I will, I do.
Great.
Ms. Harvey, good morning. I was just wondering if you could tell His Honor what your occupation and profession is.
I'm a management consultant for Touchpoint Strategies, Inc. We provide lifestyle, which is spending analysis, and financial projections to assist clients and their lawyers with various financial settlement options under, or for support claims under dependence relief and family law matters.
And what is your educational background?
I have a Bachelor of Business Administration from Wilfrid Laurier, and I have various certifications and accreditations through different institutions.
And what are those certifications? I know you have lots of them, so just give us a few.
Certified Divorce Financial Analyst, which allowed me to combine my financial advisory work. I also run a wealth counsel practice with Richardson GMP, and it combines my financial advisory work with lifestyle analysis to further develop the financial projections and models that we do. I have a PFP, Professional Financial Planning designation, CIM, which is Certified Investment Management designation, which allows me to manage money. I have a CPCA, which is the Certified Professional Consultant on Aging, dealing with older clients.
Very impressive. Now, I have a whole list of qualifications that I'd like to take you through, but I understand that His Honor has a golf game at 11 o'clock, so I don't have a lot of time. But have you ever testified as an expert witness before in the Superior Court?
I have, Mr. Ticker.
And which case was that?
It was called the Radowitz Bachelor. I don't know the actual formal name, and it was in October 2015 on behalf of Mr. Ian Hall.
Yes, Mr. Hall retained you on behalf of the applicant in that case.
He did.
So he obviously was very impressed with your credentials. Your Honor, I submit that Ms. Harvey be accepted as an expert evidence on lifestyle analysis and wealth management.
Fair enough.
Thank you very much. So, Ms. Harvey, by whom and what were you retained to do in this case?
Okay, I was retained on behalf of Goddard, I'm not sure I'm going to get this right, Gamage and Stevens, on behalf of Mr. Richard Schmier. I was asked to assist in preparing a lifestyle spending analysis for Richard and to run financial projections to allow Richard to live out his life without running out of money.
And what information were you provided with, and what documentation were you provided with when you did your analysis?
I have the document listed in one of the exhibits, and what Richard did provide me with, and Ms. Stevens, was 2 years, 24 months of his Visa, RBC Visa, MasterCard, and Amex statements, along with his along with his bank statements, which with Scotiabank. And I was also provided with financial information.
And did you meet with Richard as well?
I did. So initially I met with Richard to understand the scope of what we wanted to accomplish for him, and then to gather the information, and subsequently, once we'd gathered the information and analyzed it, I would confirm and reconfirm with Richard and get further information to finalize his spending.
Right. And I understand that you prepared an expert's report.
I did.
And, Your Honor, I believe this has been filed as part of the book of exhibits. I don't know if Your Honor's had an opportunity to see it. We will refer to it in Ms. Harvey's evidence. Lots of circles and arrows, very colorful charts. I think you'll find it very helpful, Your Honor. So what assumptions did you rely on, or facts did you rely on in coming to your conclusions, Ms. Harvey?
There's quite a few assumptions, and they're detailed again in one of the schedules, but I relied on obviously the after-tax current spending of Richard as agreed by all parties. I relied on the fact that he had no other income other than his pension income. I relied on the fact that he is not able to gain or take on gainful employment because of his head injury. I relied on, have whole financial supporting documentation around historical market data, around tax rates, around inflation rates. So I relied on a lot of assumptions that are actually built into the financial projections and the numbers. I also relied on the 2 medical reports that Richard could live either 10 years prior to or to life expectancy. And I also called on an expert in long-term, Audrey Miller, who is a recognized expert in long-term planning and aging and has dealt with brain injury patients before.
Right. Now, Mr. Schmier Richard in his evidence indicated that he didn't think he had a long life ahead, but you referred to the medical reports, and I understand. What conclusions did the doctors or opinions did the doctors have on that?
So one of the doctors, Dr. Farschleppe.
Farschlepta, I believe
thank
it's pronounced.
He,
I can't translate that, but
thank you. My pronunciations are bad this morning. He indicated that with proper management and progression of the disease, Richard could live to life expectancy.
Which would be?
Age 78 for an average male.
Okay.
And Dr. Crank had a second report dated May 25th and indicated that he could have a shortened life expectancy of 10 years within that age of 78. But both doctors agreed that with the progression of the disease, further help and medical assistance would be required.
All right. Now, Mr. Hull in his kept on referring to in his cross-examination that Richard had $1 million in assets. What is your understanding of Richard's assets?
So Richard had received life insurance proceeds from his wife of $1 million, but in addition, because of lifestyle spending, he had debts of $142,000. So really his net, once those debts are paid off, is $858,000. Plus his pension.
Right, so $858,000 in assets, and then his pension of income of about $80,000 a year, I understand?
Yes.
And we understand that the expenses are $250,000 a year, lifestyle.
The initial starting point that was agreed by both parties was $250,000.
Right.
When we did our analysis and with help from Audrey Miller and looking at medical report and the fact there's going to be progression of the disease, we actually looked at 3 distinct timeframes that Richard could potentially have, and the amounts actually decreased from the $250,000 initially because we also paid off his credit card debt and he no longer had the payments going with that.
Right. So based on your analysis, and we're going to get to your methodology,
Okay.
Hopefully we have time. How much time do I have, Your Honor? About 5 minutes? Or?
I tee off shortly, so as quickly as you can.
About 5 minutes, Your Honor?
That would be,
All right.
That's fine, yeah.
Okay. So before we get to your methodology, Ms. Harvey, if you could just summarize what your conclusions and findings were as to how long Richard's capital that he has now based on his lifestyle, how long is that money going to last him?
Based on his current spending and taking his pension income into account, Richard will run out of money within the next 4 to 5 years.
Wow. So if he doesn't get some support, he's going to be out of money in 4 to 5 years.
Yes, and he's going to have a shortfall in his spending.
And he's going to have to give up the Lamborghini then?
For sure.
Okay. In the time we have left, maybe you could just take us through a little bit how you came to this conclusion, this opinion.
So what we do is we start out, our methodology is we have 2 processes. The first step is to do a spending lifestyle analysis. And that spending lifestyle analysis, as I mentioned, we took 24 months from January 1st, 2014 to December 31st, 2015. And we analyze every line-by-line spending item that Richard did through his bank accounts and credit card statements. We have a financial accounting software called ScanWriter, which allows us to upload the information to an Excel spreadsheet. And what we do is we scrutinize every item and we basically categorize it and subcategorize it according to what it is. So a category would be housing, for example. Subcategory would be rent, heat, hydro.
Right. So that is the chart that we find at Exhibit 5B, Appendix 5B in your report?
Yes.
Do you have that, Your Honor, with the nice blue tone that's there with?
I do.
Quite impressive. So you went
I
through
like the
2 years.
color.
You went through 2 years of expenses and categories.
Yes.
Yes, go ahead.
Then what we do is, once we've categorized and allocated every expense, we went through 1,294 line-by-line items. We do something called normalizing, and normalizing is bringing your expenses current. So obviously we had prior 2015 numbers and back. So for example, if your rent has gone up or your phone bill has gone up, we bring it current to 2016. Then what we do is remove any non-recurring items. So if there was a trip to travel for maybe a relative who's passed away and it's a one-time thing, we would remove a non-recurring items. And we also take cash, the money that we go to the bank, we just take it out. We generally, obviously, are spending it somewhere, and we allocate cash to a category so we get a true reflection of that spending.
I was wondering if you could just talk a little bit, how do you determine how long the money is going to last? What kind of financial models do you use?
So the second thing that we do is we have a customized financial spreadsheet or a customized model. And I think the simplest way to explain it, and it's in, I think, Appendix 6A.
6A, yes.
So what we do, I think in the easiest way to explain it is we start with a set capital amount. So we run various capital amounts. We then invest that capital amount in the markets, and in this case we used a 40-60 bond to equity portfolio. 40% is invested in the S&P, the TMX S&P Canadian Universal Bond Index, with that information, all the history going back 35 years, provided by PC Bond, and 60% was invested in the TSX Total Return, that information coming from Bloomberg. Once we invest that money, we obviously then attribute it and add on any gains or losses each year. From the gains or losses in the amount of capital each year, we deduct Richard's net expense requirements, which would be his after-tax expenses each year, less his after-tax income. And then what we do is we tax all interest, dividends, and capital gains each year to rebalance the portfolio back to 40-60. And what this model does is it's done in two ways. It's investing the money as though it's been invested in a fairly relatively good time period, and then we invest it as though you can, or you've received the money in a very bad time period. And the worst time period going forward has been 2008 to now. And generally knowing that we're in a lower interest, lower investing environment, it's more reflective of what we would expect for Richard to go forward.
Right. So based on, you said, what life expectancy were you basing your projections on for Richard?
So because we can't determine what his life expectancy is going to be, whether it's prior to, at, or after, because, we can't say to him, you better show up and just die at 78. We actually carried the money past life expectancy with not knowing what time he would actually die at.
Okay. And based on that, what number of capital fund did you come up with that Richard needs to sustain his lifestyle for the rest of his life?
So based on the three spending time periods, the fact that we've got him living in his home with increased care in the first 10 years, second 10 years, we've got him with increased care further, but reducing his expenses because the car goes and certain things go, travel, some of the eating out. And the third time period we looked at, the last 10 years of his life, we looked at potentially that he might have to go into a long-term care home. So his expenses actually do start to decrease over time. And once we've determined all of that, once we've run the numbers, what we came to the conclusion of is that he'd need roughly another $3.7 million plus the $858,000 he currently has.
So roughly, that would give him roughly $4.6 million.
In total.
And that's your conservative opinion.
Yes.
You're very comfortable with that number?
Yes.
Thank you very much, Ms. Harvey. My friend Mr. Donovan will have a few questions for you. Don't worry, his bark is worse than his bite. Thank you.
Mr. Speaker. Mr. Donovan.
Thank you, Your Honor. Good morning, Ms. Harvey.
Good morning.
I think I heard you say that you were retained by Goddard Gamage Stevens. Is that right?
Correct.
Okay, because I might have misheard. Perhaps you said Goddard Gamage and Stevens. You wouldn't want to be associated with that firm.
You're correct who I was retained by.
I have a copy of your CV here in the report. As my friend Mr. Ticker said, it's quite impressive. It appears from that you never went to medical school. Is that right?
Correct.
Okay, that's all right. Many of us didn't. Now, you prepared your report stating that Mr. Schmier has chronic traumatic encephalopathy on the basis of the letters that were provided by Dr. Dr. Verschlepta and Dr. Crank.
Yes.
Good. Now, you relied upon these two diagnoses to the extent that they said that Mr. Schmier's care costs were going to rise. Mm-hmm. And you then prepared your report based on a life expectancy of 82 years for Mr. Schmier. The figure that you provide on page 7 of your report is that he's going to need an extra $3.742 million for the rest of his life.
Correct.
I think the word you used was he will require that.
Correct.
And that's your opinion?
Yes.
All right. Now, you realize that Dr. Verschlepta's report suggests that Richard is only going to live till the age of 78.
Correct.
And you knew that at the time you prepared the report.
Correct.
And Dr. Crank's opinion is that Mr. Schmier is going to live to the age of 68.
Correct.
And you don't have the necessary qualifications to say that that's not correct, do you?
No.
You don't know how CTE can shorten a person's life, do you?
No.
All right. So if I turn to your lifestyle analysis, it's at Appendix 5A of your report. As my friend said, it does contain a lot of arrows and circles. It's very impressive. You've calculated that Mr. Schmier is going to have annual expenses of $201,876 every year from age 73 to age 82. Now, this is an interesting coincidence, but 73 is actually the midpoint between the two ages that were predicted by Dr. Verschlepta and Dr. Crank. So age 73 to 82 is 9 years, and 9 times 201,000 works out to about 1.8 million. Do you agree with me on that math?
Yes.
Yeah, that sounds about right. So you'll agree with me that by selecting a life expectancy for Mr. Schmier of 82 years, you have effectively added an extra $1.8 million to the amount of money you say that he requires.
Correct.
And you have no basis for doing that.
My basis is that no one in this room can determine what date he's going to die at, and we have no medical opinion that says he's going to live. No one can predict. Well, I guess we could predict, but no one can guarantee.
We could predict. Nobody can guarantee, of course. Certainly no one in this room could predict. But that's because Dr. Verschlepta and Dr. Crank aren't here. You, in fact, relied upon their reports to the extent that you said that Richard is going to need extra care, that he has CTE, that he can't work, but you didn't rely on the part that said that he might die soon. Is that correct?
Correct.
Right. So you've just decided to, say, cherry-pick that one piece of information.
Not cherry pick, because no one can guarantee what date Mr. Schmier will die at. And from a financial point of view, I would look at the life expectancy, that the assumption would be that if he manages it properly, that he would go beyond that 73.
Okay, so let's just give him an extra 1.8 million. I'm going to continue with my questions. Can you tell the court what a CCL-CP is?
I'd have to pull that up. It's Audrey Miller's designation. And off the top, no.
I can help you. It's a Canadian Certified Life Care Planner.
Yes.
That's what Audrey Miller is.
Thank you.
Now, in preparing your report, you consulted with Ms. Miller, is that
Yes.
correct? And she works for a company called Elder Caring, Inc.
Correct.
Right? Now, I believe that you wrote that she was instrumental in your report and that she provided costs associated with each alternative future care. Is that right?
Correct.
All right. She did that.
Yes.
And you relied on her opinion.
Yes, because Dr. Verschlepta and Dr. Crank were not available.
I see. Now, did you know that Ms. Miller's company, Elder Caring, is actually in the business of providing elder services?
Yes.
And in fact, if you go to her website, you can see that she actually advertises for a 75-minute consultation, which you can get for the low, low price of $150 in tax. Did you know that?
Yes.
Did you pay her $150 in tax?
No.
Okay. You signed an acknowledgement of expert's duty, is that correct?
Yes.
And Ms. Miller did not?
No.
Okay. I want to talk about this Lamborghini that Mr. Schmier referred to as crazy. This crazy Lambo. Did you see this Lambo when you went and met him?
Yes.
Did you go for a ride?
No.
It's nice though, is it?
It's lovely.
What color is it?
Red.
Yeah. That's nice.
I mean blue.
I mean blue, yes.
That's
That
nice.
cherry red blue.
Well, I assume it's nice because by your calculations, he's spending about $50,000 a year on it.
Correct.
Yeah, it's lease payments, auto detailing 6 times a year. It's a pretty crazy Lambo. Do you have any concern that a man with CTE is driving around in a high-powered Lambo?
I can't comment on his medical condition other than I know he has some memory issues and he has some headaches that he manages at this point.
That's all you know of?
My understanding is that, and he's got some tremors.
Yeah,
My-
because in your report you say that he also has twitching. He has
Yes.
involuntary twitching.
Correct.
So he's out on the road somewhere in this cherry blue Lambo with his involuntary twitching.
Correct, which is also why he has a personal support worker added in as part of his costs, and also why the car is given up after the first 10 years time frame.
Okay. Now, you say in your report that Mr. Schmier requires this vehicle or, quote, a similar type car until he reaches the age of 58. Is that correct?
Yes,
And in fact, you've calculated that out, what it's going to cost for that car from his current age, 48, to 58.
correct.
Right, so he's going to be paying lease payments and auto detailing 6 times a year. I'll do the math quickly in my head. That's another 10 years, $50,000 a year. That's another $500,000 for Mr. Schmier.
Correct.
And that's for a car that he says he can't get rid of.
Correct.
Can't get rid of. And if he could, your report says he should get another similar type vehicle. Is that right?
No judgment. It's his lifestyle.
That's true. Let's talk about his lifestyle. Let's talk about his lifestyle. Did Mr. Schmier talk to you about his gambling habit?
He likes to go to the casino every once in a while, yes.
He does seem to. He appears to be spending $750 at Casino Rama at least once a month.
Correct.
Is that, I couldn't tell from the report, is that the amount he spends there, or is that the amount he loses there?
What he spends there.
Okay. Your Honor, I know that you have to get to a golf game. I'm doing for time.
That's okay. I just got a message that my the fourth can't make it, so we're scrambling around to get somebody from the Court of Appeal, but they all stink.
All right.
None of them can play golf. It's ridiculous.
So for this next line of questioning, I would just like Mr. Schmier, if he could Mr. Schmier just stand up for a minute? Just stand up. There you go. Mr. Schmier is a handsome man, isn't he? He's got those rugged, timeless good looks. He's got that curly chestnut hair.
Is that a question for the witness? Yes, yes, Mr. Ticker.
What is the relevance of this line of questioning?
I don't know, but I'm dying to find out.
Me too.
In your report, you're saying that Mr. Schmier requires a lot of cosmetic work. That's your word, requires, isn't it?
Yes.
Yes. He needs at least 2 Botox treatments a year, and a mani-pedi once a month, and facials and haircuts and color. Is that what you say in your report?
Yes, about managing his headaches, about managing lifestyle and expectation with his tremors. You know, he has to have someone help with nails and hands and feet, etc.
And Botox?
Botox is to help manage migraines.
Botox is to help manage migraines. And is that your expert opinion?
No. No, oh, sorry, no, it is not.
No, it's not, but it's included in your report.
Correct.
You'll agree with me, Ms. Harvey, that all of this gambling and this Lamborghini that Mr. Schmier described as being crazy, and this Botox and all these mani-pedis, that those are some pretty questionable expenses.
I wouldn't put them down as being questionable because they are part of the lifestyle that Mr. Schmier enjoyed with his wife.
His drunken sailor lifestyle, as I believe he put it, is that right?
I don't know who put it as drunken sailor.
Oh, actually, he just said that
I missed that,
shortly
I'm
ago.
sorry.
That's all right. So, Ms. Harvey, I just want to summarize in my mind your report because I have a very short attention span and I forget things. So, it seems that what you've done is you compiled the expenses for Mr. Schmier that he says he currently has in this drunken sailor lifestyle, and that includes $50,000 a year on a Lambo he says he can't get rid of. He's got Botox, he has gambling. I can't tell whether he's losing money or just spending money at the casino. And you compiled all of that, no judgment. Is that right?
Correct.
Right. And your report projects Mr. Schmier's expenses, those expenses, far into the future, adding on costs of care estimates that you got from Ms. Miller, relying on her opinion.
Correct.
Right. And Ms. Miller isn't testifying today. She's not here at the breakfast or anything, is she?
No, but my understanding is she will be here tomorrow.
Okay. Well, that's useful.
Okay.
And Ms. Harvey, your report then tallies up all those expenses until Mr. Schmier reaches the age of 82, even though the only 2 doctors that have provided reports and that we've heard from constantly today, Dr. Verschlepta and Dr. Crank, say that he's going to live between 68 and 78. Is that correct?
Correct.
So you tacked on that extra 1.8 million.
Correct. Based on no one can guarantee or determine when someone dies.
Got one last question for you, Ms. Harvey, and then I'll think I'll let the judge run off to his golf game. So, what
It's
do you
mini
do?
golf, by the way.
Mini golf?
Yeah.
Well, I would have ended way sooner then. Mini
I'm not
golf.
much of a driver.
All right. What do you do with a drunken sailor? What do you do with a drunken sailor? What do you do with a drunken sailor early in the morning?
Good question.
Those are all my questions. Thank you.
Thank you.
Thank you.